Hi everyone. Today is Wednesday, May the 14th, and this is the Moneyball Morning Report for the Benzinga Pro platform. On the docket today, we have not too much. The EIA report, we have mortgage applications that came in this morning, and then a Fed speaker auditioning for their next role. So let's take a look at the charts overall. All right. Same as yesterday, traders are leaning on the math underneath the structure of price. We've got these implied volatility measures that are holding a high region in this newest wave that we're seeing on our 1 hour chart in the E-mini S&P. The high of that is 59.27. The implied vol moves for the day, I'm going to remove this one. The implied moves for today are going to lean more on the old weekly formations and the new weekly formations to give us an idea of what's going on. In general, we've got more motion into the market, and we know when price stalls like this and breaks a trend, it usually resumes the direction of trend. Dips continue to be buy zones. It's very clear. I still believe that these buy zones are being fueled by twofold. One, more folks turning around and saying, all right, I'm going to invest more into this market as it moves forward. We know the folks at IBD are fully invested in their swing trader events. But we also know that commodity technical advisors are still negative. So there should be a popping formation that forces them out of the trade to restructure and flip long. And I think they're going to get caught flat-footed again. And so this tells us that dips are buys, shallow dips are more likely than deep dips. And so if you're looking for a big, broad reversal, probably not in the charts at this particular time. So my thought is this. Here we are. Very tight opening range. So when a tight opening range exists, it is likely that we break the upper edge and the lower edge. So we've got to be very careful, especially when the moving average begins to flatten on something like a 1 hour formation. In the grand scheme of things, one of the ideal buys would be the bottom of the opening range near 5,900. The next line below that is 58.85, so you'd want to collapse into a 15-minute time frame or maybe a 5 and watch for the change of motion that says, okay, I'm going to head back up into that region. So all signs point to higher levels today. Just follow the picture. If the support breaks, step out, wait for the next support, and let the trade action you take be in the direction of trend. Upper levels, 59.71. Towards the end of the week, they're looking at a 6,000 zone. Certainly into next week, we've got ourselves maybe 6,020. That's what we're staring down. Could we have a news wick that ends up bringing us deeper? Yes. So we manage the risk very tightly from that formation. Lower level, 58.85. First upper level, 59.27. We've got a little bit of a dead space here. Not a ton of stopping areas right in this zone. So we'll just watch those moving averages on the tight time frames and stay long on the dips. All right? Let's step to the NQ. This one continues to move pretty aggressively. It is sitting at the last implied volatility measure from several days ago was 21,345. We're dancing around that area. Notice the range. It's very sideways. It's breaking trend by time and not price. Also a very tight opening range that suggests we can move above it as well as below it. It holds the floor. That's a really big picture there that says dips, especially as we're trying to creep higher, dips into 21,241, give us a nice buying opportunity. It could be that we hold 21,275, but I would like to see dip action before moving into the long. There are a few more implied volatility moves sitting inside of the NQ. That's 21,423, and then a measured move up at 41,496 to 500. Below 21,241, a little bit of free air. That's about 150 points wide, close to 200 points wide, and it also converges with that 50 simple moving average. Does that appear likely at this juncture? No. We've got trend that is up, momentum down, but still positive, suggesting that we've got a little range break action that is on the horizon, but not without the dip. So I like the buying area around 21,240. Remember, when you come into these buying areas, collapse into a tighter time frame and look for the following. 1, do I stop heading lower? 2, do I break resistance? That's usually 2 candles to the left. 3, do I pull back and hold a higher low? Now notice, there's no pullback here. It just simply holds it. So the risk event, a little higher if you're trying to buy a break like this. Trade micros or small size if you're trying to move out of an area. My thought is the range break going to bring stops. It's going to run stops up into the higher zones. The pullback is the better bet under flattening moving averages like this. Again, lower edges, 21,067. But that's a pretty wide range there. I would not expect price action to move below that zone. Okay? And above the area, let's put that right there. My thought is 21,500, 21,530. Be careful of that zone. Let's go to the YM. Not many of us trade the YM, but it is important for us to realize the YM looks a fair bit different than the rest of the market. So, what does that mean? Does it mean that the YM is leading and the other indices are following? Or does it mean that the YM is lagging and it's got to catch up with the others? I don't know, but what I can say is tight opening range. We broke above it as well as below it. That's very common in a tight opening range. We have a downward moving average on the tight, fast moving average, and our slow moving average is upward, but we're sitting underneath it. So traders are going to want to recover it. What's a nice buy zone here? 21,220. The low of this morning is 21,160. That's pretty wide, right? So 1 lot, 2 lots, and manage your stops, carefully realizing that the goal is to get above the range. Implied move into June, still very far away. Could be that we're sitting in a great big sideways patch. We could get down. Is this a 200? What is this one? 100, sorry. We could get back into the 1 hour range of 2 days ago. My suspicion, however, is that the YM holds 21,200 and then moves into, 42,200 and then moves into 42,450. My apologies if I've been using the wrong number mentally there. Okay, so we want to see it recover, get out of the space. Notice we stopped heading lower. Now we're just testing resistance, right? That's 2 candles to the left. Now we're looking for a pullback, potentially that 42,200, and then we're off to the races. If we lose 42,200 and we can't recover it, we now look at the downside break that fills in this gap of motion that pulls us down into 41,920. All right, let's take a look at micro Bitcoin. Pretty tight opening range here. A mixed bag of moving averages. So we can see the range is actually here. This is the structure that I'm building, right? This is the last swing high, swing low, and it's captured all of the movement here. The 50% line is the one I like to look at. So there was a buy zone at this 103,600 area, but now we're coming to the bottom of that opening range. Can we hold it? I don't know. Momentum is up. The 100 moving average is up. The 50 is flat, and the 10 is all over the place. Looks pretty rangy, and so based on opening range trade formations, that would be where I would take profit if I was trying the reflexive move in the direction of trend. It's held by the 100. We take that 103,600 trade. The target 104,500. And if you want to leave a runner on into 105,000, it's possible, right? It's possible. We are actually still in the opening candlestick formation of 2 days ago. If we clone this, we can see that what we tested in the overnight was the low of the opening range yesterday. That's why these opening range bars are so important to keep your eyeballs on, even as you're using market structure to help you, because they're much more defined than that market structure itself. You can see the traders going after that level and saying, hey, listen, let's buy it right there. Okay, is there a reason to short up here? I don't think so. Why? Momentum is up. We're above the moving averages, and we bounced off of the 50% range. So my thought is we get into the tighter structure formation and get up into the 105,000 area. Okay, let's take a look at oil. We've got the EIA report here today. Big fat move, a lot of noise, a lot of all kinds of things going on, really. I'm going to shift that market structure break from the area to the left on May 12th to yesterday's formation. We still have the same low, but now we have a new high. Look at where it's holding on that 50% marker. It's also the implied vol move and the 50. So they're trying to buy it here. For sure. What's the problem? Momentum is down. So if you say to yourself, hey, I'm going to try and buy it here, you've got a downward moving 10 and an upward moving 50. So there's going to ping pong. There's going to be a ping pong event. Maybe 30 cents to the upside here is what you might be looking at. And if it holds that, we get back into that opening range. My suspicion, however, is that this chart moves down into the lower edges and loses this 50. So I would be more inclined to wait for a bounce action up into 63.24 to 63.50 and choose the short from there. I don't know if the market's going to allow me to get to that $63.50, but that's what I'm looking at. Could you take a long down here at 62.80? Absolutely. There's a lot of convergence sitting right there in the zone. You just want to have your stop fairly tight because of momentum and short-term trend, right? You can always re-enter in that space. Okay, so lower edges in oil, if it loses 62.78, that's going to bring us down to $62.26. If it holds this $62.80, we have the likelihood of pressing into $63.27 and then $63.50. All right, let's go to gold. Gold's in a bit of a pickle, right? My suspicion is that it continues to fade. It had a pretty tight opening range, relatively speaking, right? Yesterday's opening range for gold is 3,247. It's already gone beneath the day's implied vol move. The weekly implied vol move for the rest of this week is $3,204. We've got a bottoming formation that gold buyers are going to be looking at 3,210. They're going to try and buy that. You can see them trying to bounce off the level, but look, we've got reversion to the mean. That means we went sideways into the 50. And now we're moving in the direction of trend. Look what happened. We went to the top of that tight opening range, popped out for just a few ticks, failed, and then bounced and gave a lower high in the formation. That gives us a short. If we want to stare down that opening range failed bounce of the prior day, we can say, all right, if it comes back into 32.47, I'm going to take that short, and then I'm going to move it down into my implied volatility move at 3,234, and then 32.26, where it bounced yesterday in early market trading. So what do we expect now? We expect the buyers to try to bounce it off of this 3,210. We can see them trying to do that. My thought is wait for the bounce into the prior day's opening range, see that it fails, and then move down. We've got a lot of negative momentum here. And when negative momentum gets very deep in gold, particularly in the last bits, we stage a bounce. And that's what we've got going on. Potential bounce down from this area into resistance where another short is likely to unfold. Let's take a look at SPY. Buyers, very tight opening range. What did we do? We lost the bottom of it. Now we're above it. Here is prior resistance. That's an important level. That's $589, right? If we break up over there, the implied vol move sends us to 591. For the week of motion, it's still got us at 595.24. So the ranges are wide, but trend is quite significantly up. Did we get these weird wild wicks? Who knows what those are? But dips are buy zones. With momentum all the way up here for so long, it would not be surprising if we dipped into the lower edges like the 583, 585 zone and then bounced back to the upside. That's what we're staring down here. Upper end again, 591 to 595. Lower end, 583 to 580. Lastly, let's look at the Qs. Also very tight opening range. Remember, that's what the tight opening range tells us. If I dip below it, I'm likely to move back into it. There's always a consolidation motion, particularly when the moving average is flat, if the opening range is tight. And so what we've done is broken above the high of yesterday. That gives us a sense that the fades into the top of that opening range at $516, that's going to give us move to the north. And that looks like 520 to 521 with the weekly move into Friday at 525. There's still a lot of volatility packed into the charts over the week, but deep dips and even shallow dips are buy zones. Dips should be fairly shallow, so don't wait for a big long trade. You know, you could even use time-based trades, but that's another discussion for another day. If a chart holds steady for hours and hours and hours, and the trend is up, it's going to turn around and move back to the upside. That's just the natural way, statistically, for it to move. Downside in the Qs, $512, all the way down to maybe 507, 508. That's something super important to watch. Not sure it's going to give it to us today. I'd love to see some consolidation that's more than just a few hours. The market needs to digest some of this move to confirm that we are stabilizing and building bigger volume shelves as time moves on. All right. Good luck trading today, folks. We've got the midday money ball at 11:45 today. And then you can see me on Lunchbox Trading on Top Step TV. Take care, everyone. See you soon.